Hello, this video is from my futuresblog.com. I'm going to post it on how you can make money with price patterns. This particular chart here is for the October live hogs this year, '07. This is the daily chart, and here is a bear flag right here. You can make some pretty good money with chart patterns. This bear flag on this particular one turned out really good, and it's a recent one. It started taking off here back in last August. So if you're trading, if you're back in August, you'd want to be trading the October contracts, and this is it. It starts right here, and you can determine where it's going to go by measuring the pole. This is the pole here. Here's the top of the pole. Here's the bottom of the pole. Top of the pole is at 77.50. The base at 66.675. And that gives you a target to shoot for of 10.825 points, or 1,000 points. So your target would be, you subtract this from that, and this is what you're shooting for. And look what happens at the breakout. Here's the target right here. One contract, it's about $4,000. Not too bad for a month's effort. That's actually kind of a safe effort. You've got a down trend here. This MACD supports this flagpole. This is critical to this whole thing. If you don't have the support, you don't want to monkey with these things, because you'll lose every time without fail. If you got some support, you got a very good chance of making out. Your breakout point is on this point right here at the base of the pole, and that again is at 66.675. Okay, I'm going to show you something here on the weeklies. Okay, here is that weekly chart I mentioned. It's the live hog October weekly chart of '07. It's peaked out here. This started back in May of this year. Take note of this. This is where these things pop up where you least expect them, and they're really quite valuable. Here's a 1, 2, 3 down. Here's the number 1 point, a number 2 point, and a number 3 point of a 1, 2, 3 down price pattern. You don't trade these on the weeklies. You'd go pick them up off the dailies. But here would be the breakout point right here, which is going to turn out to be about the same level that the bear flag on the dailies worked out to. This particular chart goes back to the first of this year. This is January of '07. Here's the oscillators that support this down move. Right here, here's a price oscillator. It's really quite a nice little indicator. My all-time favorite is the MACD, moving average convergence divergence. What that means is, notice this going up, this indicator is going down, it's diverging with the price. In other words, that's going up, this is going down, that's a divergence. Okay, I'm going to move back to the daily and show you how this thing is turning out and how to figure what you're going to get on it. Okay, as you've seen on the weekly, this period right here is in a pretty good down move, and you might as well grab it and make your money here. That's how you do it with price patterns. This bear flag is a really good one, formed up nicely. Here's the pole right here. You start on this down day here, and the pole ends up here on another down day. Here's the flag itself. I pointed out. To measure this pole, you pick the high at the peak of the pole and the low point right here on this one, and you get the difference. And in this particular case here, it's $10.82.5. There's 100 points in each dollar on a hog contract. And again, I'll point out that this is the live hogs October '07 contract. When this flag breaks out, as it did, You're going to get a little drawdown because you get in here, right here someplace. You put in your sell, good to cancel, and you get picked up right along in here somewhere. A little bit of drawdown, but you put your stops in, there's no big problem. The prices break to the downside again, and it just takes off on a runaway downhill. You're going to make a lot of money. There's roughly 1,000 points you're going to pick up here. $4 to a point. That comes out to right around $4,000 for a couple of weeks of easy work. This here just took watching. You don't have to break a sweat, just let it form up. Don't jump the gun. Don't try and make out more here, because you're probably going to lose if you do. You could, but it's not worth the risk. You let it break out here at the base of the pole. Don't try to jump the gun again, because it'll cost you. To make this thing work here, here's my MACD. This is critical to this whole price pattern method of trading. You have to have indicators to support this or any of the other kind of moves. If you don't have, if it's a down move, your indicators better be going down. If they're not, you're in trouble. On a weekly charts, if that's in an uptrend, you don't want to trade the down moves. The risk is too much. Okay, one side note. This chart, and a lot of the charts I use, come from tradesignals.com. They have a lot of really nice charts there. Look like this, and you can change its colors. Set it to suit yourself. Set your own indicators up. It's really good. It doesn't cost a thing. All you have to do is sign up. It's tradesignals.com. Okay, I'm going to finish this off. This video is going to be posted on my blog at www.myfuturesblog.com. If you'd like to learn more about these flags and the 1 to 3 pattern, triangles, I have a free ebook there that I wrote back in 97, 98. It covers all the price patterns I used and a lot of the rules that you should really follow to be a successful trader, and how to make a plan. A plan is critical to your trading. Okay, until the next time, good trading to all.